pleased today that we've partnered again with both Nigel Morris and Graham Irons, who kindly put together some content in the good old days, rather, when we could all meet face to face, when IR35 reared its head first time round. So probably this time sort of last year, give or take, it's probably our anniversary for this one. So yeah, really glad to be doing this again. So just a little bit of housekeeping for everybody. So during the format, so everybody's cameras and microphones are muted automatically. I would ask if, just for general housekeeping, if people could sort of continue to have that. If you do have questions, however, we do want to get some engagement from people, please feel free to use the functions below. So if you can see sort of down the bottom bar, there's a Q&A function. So not the chat function, but the Q&A function. If you could use that to insert any questions that you might have. And then what we will do is do our best to get those covered at the end, both with Graham and Nigel. So we'll do the Q&A at the end of the presentations as opposed to after each of the speakers. So yeah, please use the Q&A function. And also there were some questions sort of kindly put together, I think, at the start when people registered. So again, catching up with Nigel and Graham this morning, I understand these have been fed into the content. So we should get those predetermined questions that you've all been interested in answered throughout the content itself. So without further ado, then I'll hand you over to Nigel Morris. So Nigel Morris is the Employment Tax Director over at MacIntyre Hudson. I think you should be there. Yeah, welcome, Nigel.
Thank you, Mark. That's great.
So can hear you loud and clear. I'll turn my camera off and I'll leave you to it. I'll speak to you soon.
Thank you. That's great. So we can move the slides on. Brilliant, thank you. So yes, as Mark said, I'm just going to do an update. Really, I'm not going to go over too much of what we presented last year. Clearly, interesting. If you listen to sort of Rishi at the budget yesterday, he was quite clear that he stood up at last year's budget when obviously IR35 was still very much due to happen from the 6th of April. And he was able to say that pretty much everything he announced in that budget didn't happen because of the pandemic. And one of those things that didn't happen was IR35, so that's got shelved for 12 months. There was, as Mark said, perhaps a hope and expectation that it might be shelved for another 12 months, but that clearly isn't happening. The only things that came out in relation to IR35 in the budget yesterday were administrative. And the only thing of any real significance to us on the call today is the fact that HMRC have spelt out that they will take a light touch in relation to penalties for the first 12 months, unless businesses just haven't done anything towards getting things right, or they have just acted in a fraudulent manner. So they've spelt that out, which is nice to see. But yes, it's probably still in the private sector going to be a little bit of a learning. It might be something a bit of a learning sort of curve to sort of go through. So if we can just move on, Holly, thank you. Yeah, skip on from that. I'll just cover all those things. So IR35 really, let's just get this into context. This is about the government being concerned that people who work like an employee are paying the amount of tax and national insurance as they would if they were an employee. So when IR35 was first introduced 20 odd years ago, that was because there was a concern that individuals were providing their personal services to an end user, but because they were operating through an intermediary, so whether that was an agency or a personal service company or a partnership or some other intermediary, that actually PAYE wasn't being fully operated. So they brought in 20 odd years ago some rules that said the person paying the individual has to operate pay as you earn. And clearly that didn't happen, and so they got a bit fed up with that not happening, perhaps because PAYE wasn't being operated, or payments were through dividends or diverted to spouses, etc. But they changed the rules and said, right, what we're going to do is we're going to turn that on its head, and we're going to say the end user has got to be responsible for making this PAYE withholding from these payments in the circumstances that apply. Now, they first introduced this in the public sector in 2017, and then obviously now it's extending to the private sector from April. So that's really what it's about. My bit's easy because I'm just going to do the tax law. Tax law's a doddle. You're either employed or you're self-employed. And that is relevant for whether something is within or not within IR35. Graham later on has got the harder task from an employment law perspective, because actually not only are you an employee, but you could be a worker or you could be self-employed. So if we think about the recent Uber driver case, they are still not employees, but they have many, many rights as if they were an employee. But that's all about employment law. For tax law, they're still self-employed. And so it's really important to understand that IR35 applies where there are personal services, not outsourced services. Now, outsourced services can still involve people, but it's not just about the personal services of an individual. So just to give you a really broad example, a end user might have a construction site and they might have a JCB digger and they might need somebody to drive it. That could therefore, the driver could therefore just be providing their personal services. In the same scenario, they might not have a JCB digger and they're therefore saying, well, actually what I want now, I don't just want a person to drive my JCB. I actually want somebody to come on and actually provide all the plant and the equipment and the labour and dig a hole for me. That is an outsourced service. And therefore, that's the difference. So IR35 is just about the personal services. It's going to apply for most businesses, certainly medium and large size businesses. The easiest way to tell if you're not caught is if you're a small business. So if you're a small business, and that means that your turnover is two of these three things: either turnover less than 10.2 million, less than 5.1 million of assets, less than 50 employees. So if you tick two of those three things, then you're going to be classed as a small business. IR35 won't apply to you if you're the end user. It will still apply to you if you're not the end user. So the end user needs to be the small business, not just maybe your business as the pass through. And of course, and it doesn't apply if somebody is genuinely self-employed. So we can move on to the next slide. So why do we care? Well, HMRC care because self-employed people generally pay less tax and national insurance. And even before the global pandemic that was going to cost us 400 or so billion pounds as a country, there was a concern that the Exchequer wasn't getting the money they wanted. And so therefore IR35 wasn't working again how they wanted it to 20 years ago. So they're interested because it will yield more tax and national insurance for the Treasury. But IR35 was no good for them in the old fashion, because they haven't got the resource to chase millions of businesses. They have got the resource to chase tens of thousands of employers or end users, and obviously have them act as tax collectors for them. So that's why they've changed the rules, and therefore put the onus on the employer, the engager, the end user to decide if IR35 applies, and if it does, to either operate PAYE themselves, so to put these people on their payroll, even though they're not employees, to take the normal PAYE tax and IC withholdings, or if there's an agency next in line, a UK-based employment agency, and we now sort of have umbrella companies as well, that they have to operate PAYE, so that either the end user themselves or the next person in the chain, if it's a UK-based agency, has to be operating that PAYE withholding. It doesn't still, IR35 doesn't change if somebody is an employee or not. You can still operate through a personal service company and not be an employee for employment law perspectives, but there is a withholding that's required. And that's important when we're thinking about things like statutory payments. So if it's an IR35 determination still through an intermediary, then then the end user isn't the employer, and therefore maybe haven't got to worry about pension auto enrolment and things like that. The only difference, and this isn't IR35 related, it's always been out there, office holders. So if you've got a non-executive director, they're paid off payroll, maybe through an intermediary. If they're doing any kind of statutory duties, say for sake of argument, they're the chairman of the board, then that has to be PAYE, and that's always been the case. So that's not new, but it's something that perhaps might have got overlooked. So in order to support all of this, HMRC created a new online tool called Check Employment Status for Tax, the CEST tool. And there you go in and you answer the questions, and it gives you an indicator, gives you a determination, which could be useful. It isn't, however, completely foolproof. It isn't perhaps as well constructed as it could be. It does put some emphasis on some things that perhaps the tax cases and the tribunal cases and the employment law cases over the years, have dealt with differently. But to the extent that you put in the true facts, there's true substance over form in the way that you answer those questions. If it gives you the right response, then that's okay. But it may not always do that. It puts a lot of emphasis on 2 or 3 particular areas, probably a bit more than perhaps it should. But I won't cover what those areas are, because Graham is obviously going to go into the detail of the sorts of things that you'll be asked about when you go through the CEST tool, because it's again linked to the case law that backs up whether somebody's employed or self-employed. So that's important as a determination as to whether IR35 may or may not apply. And HMRC have put something out there that you might want to use. Next slide, please. So what do you need to do now? Well, there's probably a comma missing. So be prepared so that you can avoid significant labour supply and business continuity issues. There are some people who just like being engaged in an off-payroll manner, and there is absolutely nothing wrong with that. But the implementation of these new rules might mean that that has to change in some way, either in relation to the administration or the engagement or the payment of people, and that might mean some people, seek to want to go and work elsewhere. Because of course, if you don't get this right, if you don't do your due diligence and operate in a compliant manner, then there are tax and national insurance contribution liabilities, as well as interest and penalties. And I've mentioned that soft landing on penalties for the first year. And I think what we'll see over the first 12 months is some HMRC inquiries, undoubtedly. And I think as in the profession, we'll gather what HMRC focus is, where they're putting the emphasis, where there are things that are going awry, and we'll be able to sort of reflect on that, and in 9 or 12 months' time, be able to sort of update and go, right, look out for this, look out for that, make sure that, if there are any sort of tweaks to policies and procedures and contracts, we'll be able to sort of give an update on what that's looking like. But actually, be prepared. The 6th of April is kind of when this goes live. It's very clear that it's for payments after that. So if you've started to align all of your payments to off-payroll workers, you may start to really impact you at the end of April when you pay the invoices. And so you've got some time still to get on top of this. The one practical area that I'm getting lots of questions about now, people have started to do their assessments, they've started to look at their worker types, they've started to decide whether on and off payroll applies. But there's this requirement to issue a status determination statement. But there is no standard template. HMRC do not have a standard SDS. So you need, to be producing one and covering off, that the fact that you have assessed that, share that with the individual, maybe share that with the agency if there is one, to outline what's influenced your decision-making process, whether somebody falls within or outside, and the reasons, the 1, 2, 3, the 4, the 5 reasons for that. And those will typically involve the things below that, not exclusively. There could be more aspects that are covered, but personal service, control and direction, whether somebody's part and parcel of the business, their financial risk in business on their own account. But these are some of the things that Graham will pick up on in his session in a moment. Invoicing could be really messy. You may determine that somebody's caught by IR35, they continue to operate through their personal service company and sending you invoices. Those invoices will come in for the work they're doing plus VAT. You've got to strip out the VAT, so you've got a purchase invoice, and then you've got the VAT going to the VAT account, but then you've got to take that gross amount and put that through payroll, and then you've got to make some payroll deductions, and then you come up with a net payment amount that then goes back to the individual that you add the VAT back on and make as a payment to them. I think there's at least half a dozen potential T accounts within the finance function that would need to operate in order to satisfy that flow of information of that invoice. That could be pretty tricky, pretty messy. And worth just understanding that the construction industry scheme, which is another tax withholding scheme, IR35 takes precedent. So if you're in the construction sector, you can't just sit there and go, well, that's okay, we deduct tax from people because we use the CIS scheme. IR35 comes first. It always has come first. Employment status has always come first. And it's one of the questions that you have to answer on the monthly CIS returns. Have you assessed somebody's status? It tends to have been overlooked in the past. So be very, very clear that IR35 is the ultimate tax and IC withholding. If that doesn't apply, perhaps because somebody is genuinely self-employed or outside IR35, then if the CIS scheme is applicable, you then look at their CIS status and CIS tax withholdings that may or may not apply. So there's a bit of a chain that kind of needs to be gone through. I think we'll be. I think this has been recorded, and I think we'll share this after. So the next slide is just some top tips, but they're just some things. So if we move on to that, Holly, these are just some things that you will see, just to help you to have a bit of a plan. You're probably partway through that already, but that's just something that to help to sort of frame this for you. And we'll try and manage questions on the Q&A. And maybe as a bit of a wrap up at the end. So for now, I'll hand over to Graham, who's got the trickier of the two jobs.
Thanks, Nigel. So I was in far too much of a rush to leave earlier, and one of my jobs where I didn't have very many was purely just to run some polls, just to gauge the tone and what the audience is actually like today. So. And really what sort of stages they are with sort of IR35. So we do have a couple of polls before going to Graham that I'd just like to run, please, and get some participation from those that have joined today. So Holly, do we have the polls that are ready to go? As if by magic, superb. So first of all, if people wouldn't mind checking a box here. So are you, first of all, are you a contractor on the call today that's learning to find out more about IR35 will impact work, or are you actually the employer trying to find out about how it's going to affect your hiring? So yeah, if people could please select one of the options. Great, we may be able to just sort of share the responses. Okay, so yeah, an overwhelming majority here are still employers. So businesses out there that are still keen to find out more and I guess up their level of skill. So next poll, please, Holly. So if indeed, so the majority there, so being an employer, how far along are you with drafting sort of SDSs at this moment in time? So is it something that you haven't even started looking at as yet? Progress, but could probably do with a little bit more guidance. It's in progress, but sort of got it covered or completed and it's done and ready for use. So we won't judge either way, I promise. So people could select one of those, that'd be great. Just give it a couple more seconds to get answers in. Again, we should be able to just sort of share the responses. Okay, so yeah, so the 44% were probably in the optimistic category that IR35 may have been shelved. So again, yeah, so hopefully this will help. And again, being an employment agency out there, we're starting to receive and have been receiving SDSs through for our contractor base that's out there. But again, we still don't have all. So again, yeah, something that we probably need to be focusing on. Is there another poll there, Holly, to run? Yeah. And again, just on the CES tool then. So have you actually used the CES tool yet, either as an employer or a contractor, or just not at all? Okay, and we should be able to just sort of share those as well. Okay, yeah, so contractors that are on the call haven't perhaps used it to check. Employers have sort of direct sort of 50-50. So yeah, we can probably sort of share some links here to sort of CES tools at the end. And on that topic, yeah, Nigel alluded to it, and yeah, we will send out slides to everybody. We'll send out a recording of the content as well. It can take sort of today to get those things sort of edited and sent, so it may well be sort of first thing tomorrow or tomorrow at some stage. But yeah, we'll definitely get the content out and sort of feedbacks, etc., and anything that may help us in addition. So great. No, thank you, everybody. Really interesting to get a bit of insight as to who's on the call. So Graham, I think hopefully seamlessly we should be able to hand over.
Thanks, Mark.
Great. So again, I'll just mute and disappear. I'll hand over to you.
Good morning, everybody. Welcome to my part of the seminar, which very much ties in with Nigel, because we're talking all about employment status here. So what I'm going to be talking to you about is lorry drivers, car washers, plumbers, taxi drivers, cycle couriers, and last but not least, lap dancers. So that's what you got from me today. So I've just whizzed past the agenda, but basically I'm going to look at the three types of employment status, the impact of status on employment rights, some case law, some interesting case law to see how it works in practice, some key factors and to consider as well. So we've got our three types, as you know. First one, of course, is employee. So an individual's entered into or works under a contract of employment. So nice and straightforward. That's the definition of employee. And there are three key elements that need to be fulfilled, being personal service, degree of control, and other factors consistent with the contract of service. This comes from a case from 1968, that's still good law, which is ready mix concrete case. That was basically self-employed cement delivery drivers. They had their own vehicles. They did wear a company uniform, interestingly, but they had to sort of basically obey orders in terms of where they were supposed to go. But they set their own hours, in particular, had their own vehicles, and they set their own routes. All those things were quite important, that showed they were self-employed rather than employees. So in terms of our next type of worker, well, it is a worker, in fact. If my slide moves on, it's delaying a bit. Let's try again. No. Aha. We'll probably move on to, I suspect now, but anyway. So our definition of, yes, indeed it does. Let's go back. Our definition of worker. Apologies, there's a delay when you press a button, nothing happens for a while, so that's what's going on there. So we have a definition of a worker under the Employment Rights Act, and effectively it says you've got the first bit, which is a contract of employment. The second bit, that's the employee. The second bit is any person and under any other contract, whether express or implied, and whether orally in writing, where the individual undertakes to do or perform personally any work or services. So that's the key bit, performing personally. And it's where they're not effectively in business on their own account. That's the key point. It's what we call a Limb B worker. So if you ever hear a reference to a Limb B worker, it's called Limb B because there's Section 230 of the Employment Rights Act, which has then got a Limb A, which is a contract of employment, a Limb B, which is that bit I've just read out that will be in your slides. So that's our definition. So as Nigel said, IR35 is not really that interested in workers as such, because it's more about it's about tax. It's about are they self-employed or are they employees? They don't have that third category. But even so, the worker bit's important because of that bit I just mentioned about personal service, which is very important when you're coming to look at employment status and when you're trying to assess whether someone is subject to IR35. In addition, there'll be other people you'll have who you're engaging, consultants, etc., where you also need to keep an eye on their employment status as case law changes and the focus shifts. And we'll see a significant shift in focus later on when I get to looking at the Supreme Court decision in the recent Uber case. So two key questions for you really in looking at employment status and workers. Is the individual working for their own business and their own clients, or just yours really? And is a dominant feature of that contract personal service or for the service to be provided? And it doesn't matter whether it's them providing it or someone else. And that's the example that Nigel helpfully gave earlier on about operating a JCB. So the next question is, then why does it matter? Well, I'm sure you appreciate why it matters, because obviously employees have certain rights such as unfair dismissal rights, and workers generally have some limited rights. Might not have the right to claim unfair dismissal, but they do have the right to claim discrimination. They have the right to claim holiday pay under the working time regs. They get national minimum wage too. So obviously employers have got all those rights as well. And so it does work out sometimes for certain categories of workers that actually, they have the advantage of still being self-employed, so being self-employed for tax purposes, but then they have the advantages of being workers to get their employment rights. What does that mean? It means they've just effectively given up their rights to be employed. They're not employees. They haven't got the rights to claim unfair dismissal. But they would see that as for some of them would see that as a worthwhile trade-off. Interesting on the workers thing, one thing to mention employment rights is there's a slightly wide definition under TUPE, and there was a case involving City Sprint. It's only an employment tribunal decision, but they found the cycle couriers were workers, but they also decided that meant they were they were workers, so covered by TUPE. So there has been some. That's only a first instance decision, so it's just something to watch out for. Auto cleanse. So car valeters I wanted to talk to you about. So the car valeters there had some fairly lengthy contracts, very detailed contracts, very clearly stated they weren't that they were self-employed, not employees. Very clearly stated there's no mutuality of obligation. And they could substitute to get someone to do the work whenever they wanted to, but that wasn't really what was happening in practice. Whilst they were for tax purposes self-employed, there wasn't a dispute on that. In practice, they were offered work and they had to do it. And also, they couldn't actually substitute anyone else to do their work for them. So that went up to the Supreme Court, and they were found not just to be workers, but actually they were employees. And what was important about that decision, it was the Supreme Court saying, even if there's something in writing, we're not going to be stuck with that. And if we think that the relationship's inconsistent with what's been recorded, then we will look beyond that contract and find the reality. So that was a really important decision. The next case to mention is Pimlico Plumbers. So in this one, Mr. Smith, he had a heart attack and his contract was terminated, and therefore he brought a case. And the reason I mention that is simply because it's often when things go wrong that these sort of issues come to the fore. Obviously, you've got IR35, so you've got a particular focus there, but also general employment status things. When everyone's happy, things go along fine. When things go wrong, that then people start challenging the employment status if it suits them at that point in time. So some key factors here. You can see we've got the agreement stated the person was self-employed. They prepared their own tax returns. They were self-employed for tax purposes again. Right of substitution, but only to another Pimlico plumber. They carried a Pimlico identity card. They had a branded uniform, branded van. I think they supplied their own van, but it was branded. And they had instructions issued from a control room. In terms of the customers, if they didn't get interested, if they didn't get, the customer didn't pay, they didn't get paid. So there was some sort of risk there on that one. They also had some post-termination restrictions, which they couldn't work in London for a 3-month period after leaving. So what happened ultimately at the Supreme Court was that they were found to be Mr. Smith was found to be a worker, but was found not to be an employee. And he was an independent, so not an independent contractor, and that was because he provided personal service. And again, that was described as a dominant feature. So that was the important thing there. He could pass the work to someone else, but it's someone under the same obligations as him. So it's almost like passing it to another employee to cover for you. And there's some key factors you can see at the bottom there, which sort of really sort of negated the argument that Pimlico was just a customer of Mr. Smith. Bizarrely, the contract the written contract did refer to things like wages and dismissal. So they weren't exactly helping themselves. Interesting thing, I was attending a talk with a barrister, and he was saying that he had a Pimlico plumber pop round his house to do some work, and he asked him about the case, and he said that the company basically told the worker it wouldn't affect most of them anyway, because everything had changed since then. And that seems to be a feature of these sort of gig economy cases. But what happens is a decision happens based on certain facts that were in place at that time. And then the company makes some tweaks to the contracts and the arrangements, and then says, well, actually, that decision doesn't affect you anymore. Apparently this is quite a common thing. So, and that's actually very much what's happened in the Uber case. So we've had that decision recently to the Supreme Court, where the drivers won the right to national minimum wage and also to paid annual leave. Effectively, we're saying they just did lead generation for self-employed drivers. Had an app. If people, what they wanted to work, they could log into the app and carry passengers. Otherwise, they didn't want to log out of it. The drivers did supply their own vehicles, and essentially the app just found the person closest to where the customer wants to be picked up. And then what they do then is they don't send them the destination, or they didn't, and instead they just gave them directions. They had to follow a prescribed route to get there because they didn't know where they were going. So it's only when they actually find, then they find out where the passenger at that point wants them to be taken as well. So they don't get much information before. So Uber effectively created an invoice for them to print as well. So what that meant was, even though they provide their own vehicle, they still vetted the car, and there was a significant degree of control. And ultimately, if they didn't do enough, if they didn't enough pickups or didn't do them quick enough, then that would be sort of a performance issue essentially, which could lead to the termination of their engagement. So because that sort of communication between sort of the driver and what Uber would ask would be their customer, the passenger, was such a minimum, the decision really was that they couldn't be seen as being just a self-employed person, with lots of different customers. They were just effectively sort of providing personal service to Uber. Just waiting for the slide to move on, which it doesn't seem to be. There we go. So, but a really, really important point in the Supreme Court decision was around the relevance of the employment contract. And this is going to be very important for you when you're contracting with people going forward. I told you earlier on that the auto claim decision said that essentially, if the contract didn't reflect the reality, then the court could go behind it and find out the reality to assess employment status. What the Supreme Court does, they went a little bit further than that. And they said these fundamental rights of holiday pay and also national minimum wage are statutory rights. So they said, what we're going to do is we're going to start with the question, did the statute intend that these kind of workers should be caught by the legislation? It's almost like a sort of do they need the protection of the law? Because in these sort of gig economy kind of cases, what they're really saying is these people haven't got equality of bargaining power. You know, it's not like, you know, a specialist consultant comes in, they can negotiate their terms in a really sort of almost an equal basis. These people are being sort of dictated to. They've got no choice. They don't like it, and they don't get the gig. So what's basically they start off with that question, and whilst they won't ignore the contract completely. So they will bring it back in as another factor, but only another factor. So really important. So what does that mean? It means really when you're looking at these things, you simply can't rely on the contract. You've got to look at the reality. And yes, you should document it. Clearly, you should. It's really important to have a clear the relationship regulated clearly in writing. But you've got to make sure that's reflective of what the reality is. One key thing is substitution. Really good one. If someone's got a genuine right of substitution, yeah, that comes back to the point that it's about the service that's being provided to you, not about the person delivering it. I do struggle with this one a little bit, because if you think about some sort of specialist consultants coming in, you're bringing them in because of their personal specialist skills. They might work for various other people, so you wouldn't think of them as an employee in that way. But it's a bit of a, I think that's one's a bit of a funny area. Indeed, I was on a talk recently with a barrister, and he was saying he used the CES tool to determine his status, and it was decided they basically couldn't reach a conclusion for him. He was thinking I'd be a definite self-employed because basically, you know, he works for who he wants, he does the preparation when he wants to do it. But I think the problem for him was the personal service. It's that once he's got, you know, the brief, he can't just give it to someone else and let them do it, because the people who engage the barrister for their particular skills in employment law, or in particular areas of employment law even. So he was quite surprised at the ineffectiveness of the tool. And another accountant on the same seminar actually said he'd done a similar thing. He was very much a self-employed person doing all sorts of different services, different companies, but still found it was inconclusive. So basically, it seems to me with the CES tool that if it's an easy answer, you probably already know the answer. It will give you the answer you're expecting. I think, and Nigel could pick up this later on. If it's anything a bit more complicated than that, then the CES tool probably say it can't give you an answer. So it's of some assistance, but I don't know how much assistance it really is. Just on the substitution case I just mentioned, this was basically a bid for trade union recognition in respect to delivery drivers, and the situation here was that they were arguing delivery was saying the riders were not workers. In this case, substitution was genuine, and they really could just get someone else to do the work if they wanted to. So big important factor. And I'm interested in another case, Addison, Lee and Gascoigne, where cycle couriers were workers. I think it might have been the case that the substitution was more limited in that situation. Really important. If there's a possibility, if you're trying to push it one way, and you can allow substitution, and in many cases you won't be able to appreciate that, then that's a really powerful thing to go with substitution, because it moves away from personal service. So the next sort of real where I want to finish on this one is just looking at some of the other factors, because they are important. I'm not sure the CES tool really gives enough weight to some of these other factors. Unfortunately, it seems to be too much focus on through the personal service and control. So if we look at some of them here, so we've obviously got the right to send a substitute, which I've mentioned is very important. The mutuality of obligation. So are you obliged to give someone work, and are they obliged to accept it? The more fast and loose that relationship is, the more it looks like someone's got some control, their own control, and it makes them look more self-employed. Provision of own equipment. Most self-employed, a classic self-employed person, you would think they're going to provide their own equipment. There will be many times where that won't be the case. So that's not a decisive factor, but it's helpful if you can oblige people to bring their own equipment. Degree of financial risk taken. So that, I think that's quite an important one, because if you are self-employed, you would expect there to be a level of financial risk in terms of what you do. Again, not always the case, because consultancy agreements, for example, regularly pay a daily fee, weekly fee, monthly fee. So I told you I'd talk about lap dances, didn't I? So this is the point at which I do that. And the reason for that is back in 2013, there was a lap dancer who worked at Stringfellows called Miss Quashie, and she was arguing with the revenue about whether she's employed or self-employed. So essentially, she paid a fee to Stringfellows, that gave her access to Stringfellows, and she could then try and get the punters to pay for as many dances as possible with her. And essentially, the key thing there was that she had some economic risk. So it was up to her on her skills as to how much money she would make. And all she did was to effectively pay a cut, if you like, to Stringfellows to get access to do that. So yes, financial risk, interesting example, not a common example, but it's a useful example to show, to demonstrate that particular issue. Opportunity to profit from work done, obviously a good one. Length of engagement, obviously long-term engagements, tend to point a bit more towards employment than they would do to self-employment. But if there was a short-term engagement and everything else is pointing to employment, clearly that wouldn't be enough to defeat the argument that the person was employed, or at the very least a worker. Just on that point, actually, what's the difference between an employee and a worker? That's not a joke, by the way. There's no funny punchline, unfortunately. But it's not much is the answer. And there was one appeal case where they said essentially, a worker is just a lower pass mark when you look at all the factors. And I think this is a really difficult area. It's sort of a bit more simple in tax, isn't it? With sort of two categories, but where you have got this one, so it's so that, unfortunately, it's almost like it's a lower pass mark. So not that helpful for you, but that seems to be what the case law says. It is quite a grey area. So I tend to find when I'm advising on this sort of area, it's often just sort of saying, well, there's in the particular circumstance, they are like to be a worker, and they could be an employee as well for these reasons. And it's sort of just trying to identify that. I guess the issue when you've got someone who's self-employed for tax purposes, that would give you probably a little bit more comfort than in that situation to sort of say they're a worker but not necessarily an employee. I think other factors I just mentioned. Intention of the party I had in that list to just mention that one. Obviously, as I've made very clear, the intention of the parties is of relevance, but ultimately, whatever the intention was at the outset, or the purported intention, based on what was actually put down in writing, the employment tribunals and courts will look beyond that. So just be aware of that. Okay, that's it from me. So I think we might be doing questions now, Mark.
Great, Graham, thank you. And welcome back, Nigel. So amazing. Thank you both for allowing us, another sort of insight into this, and just giving us a little bit more of a rounded sort of overview, really helpful. And yeah, your slides, Graham, probably move as quick as I do without a coffee. I think in the morning there was we got there in the end with them, didn't we? Which is a little bit like me starting the day. But then also I like the way that you kept us all hanging with the lap dancing story. So if ever to make IR35 much more interesting than it might be at this moment in time, I think you did that well. So thank you. So yeah, actually wanted to go to any questions that there may be, and Graham and Nigel, can you see the Q&A box? There's a couple in there that I think may have been answered already, maybe with CIS, Nigel, but do you want to have
if I just pick up on those, Mark, that's no problem. Thank you. Yes, and my thanks to Graham, and it just goes to show, doesn't it, from a tax perspective, we use a JCB operator as an example. From employment law, they use much more exciting examples. So a couple of questions that have come in, so thank you very much. In terms of one of the questions is, would you recalculate VAT on the invoice or pay the amount shown on the invoice? So I think I mentioned earlier on, from an invoicing perspective, the personal service company that's caught by IR35 may still send in an invoice for, say, £1,000 plus VAT. That VAT is untouched. You leave that untouched. So that £200 is kind of added back onto the net amount after you've put that £1,000 through the payroll, and you pay the net amount from payroll, plus you add on the full £200 of VAT back to the individual. So VAT is unaffected in that respect when it comes to IR35. Just one of the other questions that's on there in terms of officers. So yeah, at NED, so non-executive directors can be outside of IR35 if all that they're doing is advisory and consultancy services. Then you may be able to sort of contract them on a self-employed basis and outside of IR35. However, if they're doing anything that's statutorial, so if they are, as I say, holding the position of the chairman of the board, there has to be a chairman of the board. Somebody has to hold that position, and therefore the non-executive director that may be the chairman of the board for those services, it has to be PAYE. So a non-executive director could have just the one hat on, and they're a non-executive director, chairman of the board. That's all PAYE, but they could actually do that, and they might do some advisory work, and you might need to sort of think about having essentially two contractual relationships with them. Somebody has asked about sort of CIS and deemed contractors. There isn't time to cover CIS on this call. Interestingly enough, though, if you are a member of the ICAEW, I will be doing an update with them this afternoon and covering CIS. So I'm a bit of a glutton for punishment when it comes to sort of these kind of update things. But those are the those sort of wrap up the questions or the associated questions that have kind of come through so far. So thank you for that. Oh, and just to pick up on the point that Graham made actually with the CES tool, it is an indicator. It can be a useful indicator, but it isn't the be all and end all. It doesn't go into some of the detail, and it does come up with a computer says don't know, or it may frame a question in a way that makes it tricky for you to sort of give the right answer, and therefore you then need to sort of step outside of CEST and revert back to a specialist advisor on taxation or employment law to get the right assessment for you. So it can be useful. Use it by all means, but it's not the definitive article.
Nigel, on the CES tool, does it keep changing? It looks like it's quite different in terms of the questions that are being asked now than the ones I remember looking at over a year ago. Are they changing them slightly every now and then?
They have done. Yes, it's changed 3 times. It kind of tweaks along the way, because they're trying to get it right. But it's very difficult because I think we all encounter things where you find that something needs improving, and it's almost more difficult to improve what you've got. Sometimes it's easier to just scrap it and start again. And I'm not suggesting that that's what they need to do with the CES tool, but given that it was a new tool, it's a shame that it's had to be tweaked, and that's led to some confusion along the way. So another question that's come in relation to if you supply statutory duties for a small business startup, does IR35 apply? Well, the point is that IR35 is where there's engagement via an intermediary. So if you are if you're providing any kind of statutory office duties, then IR35 is irrelevant, and always has been. HMRC will expect PAYE to be operated where you are undertaking statutory duties, whether that's for a large, small, medium-sized business. It's kind of outside of IR35. IR35 has brought it slightly into focus, but it's a case of saying, look, if you're a statutory holder, chairman of the board, doesn't matter what size business it is, doesn't matter how you're providing your services, HMRC will be wanting PAYE on that element of those services that you're providing. And the next question, this is an interesting one, Graham, you might want to get involved in this one as well. If we have a contractor who identifies as an employee for tax purposes and an employee in employment law, but we're a small business, what should we do? Well, I think from an IR35 perspective, you need to understand who the end user is. If you're the end user, and the small business exemption applies, then IR35 is unaffected. So however you've been operating in the past, you can kind of continue with. If you're not the end user, if you're small but the end user is not small, then IR35 does apply. And in both cases, we need to be thinking about those employment status tests, don't we, Graham?
Absolutely, yeah. The other thing to mention is that just because there is an intermediary in the relationship does not mean that automatically gets the end user off the hook when it comes to looking at employment status. So outside of IR35, the courts can and have done. They've looked beyond that and said, we don't care whether there's a limited company in the middle of it, that we think there's still an employee of the end user. So there has been clear authority on that. So that's not it's helpful because it's another barrier, if you like, another to sort of getting in the way. But it's not the golden ticket to mean that the end user won't be seen as the employer of the person personally performing the services.
Yeah, and just had another question through. This is great because this is what it's all about. It's about the attendees interacting. So thank you very much for everyone who's sort of throwing questions in. That's marvellous. Is it advisable to have a IR35 policy? Yes, the short answer is yes. I think for many different reasons. Policies covering the engagement of workers and individuals is good governance. Expanding that to cover IR35, particularly because of the change of the rules, is also a very good idea. And because there will be some businesses out there, medium and large businesses, who will have people making decisions based on their own cost centres, and obviously you want consistency in relation to all of that, consistency of decision-making process, consistency of supply as well. And I think a policy that kind of wraps that up it is a good idea, and obviously including within that is some of the areas for consideration, both from a tax and from an employment law perspective, just to help give people a bit of a guide, and some kind of process flow. So yeah, so yes, we're going to say yes, aren't we? We're professional advisors and we help policies and processes together. So of course, yes, you definitely did policy.
We just pick up on that point. I think what's important to bear in mind as well, if you have a policy or you have some documentation you've worked on, you do need to regularly review it. This is a fairly fast changing area, as we've seen over the last few years. So what works now and what's important now might not necessarily be important in, say, 12 months' time. So do keep an eye on it and just keep it under regular review.
That's great. Another question is, isn't a disagreement process required? Is there anything specific which needs to be covered? This is partly, when it comes to IR35, this is where the SDS comes in. So the status determination statement is really around saying to somebody why you've made that decision for them to be on or off payroll, caught or not caught by IR35. And there's already obviously built into the regulations the ability for somebody to disagree with that decision, that SDS, and come back to you and say, well, we disagree. Can you go and review it? You then have 45 days to review that and go back to them. But it's a little bit like marking your own homework. If you've done the SDS properly and you've laid it out and said, we've made this determination, these are the reasons why, and unless there's some misinterpretation or misunderstanding, then obviously your 45-day review is most likely to come up with the same answer. I mean, HMRC do this all the time. We ask for determinations. They come up with determination. We go back to them, say we disagree with some new facts, and then the same person reviews it, which is usually also quite before they refer it on to somebody else. So in this scenario, it's a case of saying there is a process. It is laid out. You may, after that 45 days, go back to the individual and say, well, no, our decision hasn't changed. Where do you go from there is the question. Well, what's less publicised is that you then, unless that relationship is going to break down and those services aren't going to continue to be provided, which would be a shame for both parties, HMRC then do need to get involved. They do need to arbitrate on the situation, or you could obviously seek, professional advice just to make sure that you are making the right assessments and you have put the right weight in there and you have come to the right determination for your SDS. So that's what's involved in IR35. There's this process that says you get the SDS, you give your reasons. There's the ability for somebody to sort of challenge those. There's a 45-day statutory that you need to respond, and then you're kind of, do I then go to, if we still can't agree, do I go to my advisor or do I go to HMRC? So that's kind of the process as it stands.
I guess the other thing with that, I guess, is there room for us to maneuver? Is there certain things that they're saying, well, we've determined it in this way for these reasons, and there might be some possibility of, as the contractor saying, okay, well, I can change that. And you can, and that's what we do generally when reviewing these sort of status situations. If there are things we can do that are genuine and we can shift them in a certain direction, then that's fine. What we can't do is sort of say something applies and it doesn't. But if we can generally shift things in that relationship that push it towards an employment situation, then that could work for both parties.
I'd say as well, just on that from an employment agency point of view, we have a number of contractors that are clearly out working with clients, and we've had a varying degrees of status determinations over the course of the last sort of 10, 12 months that have been specific. Some of them have been very blanket determinations, and we're going through some now which are being challenged as well. So I would say one of the key points is to actually detail, like you said, Nigel, I think in your part of the presentation, about the reasons for the determinations, because we've had a number of these SDSs that just haven't really been specific enough. The reality is maybe you're right, it won't change, but actually the detail hasn't been there, so it's kind of delayed things. And I would also say as well to use the employment agencies if contractors are out for being the conduits of this information, in order to manage that relationship and also to manage the information, it can actually be quite helpful. So I would say push back on agencies where they can, but again, we're not the experts, and this is what I would really stress, is that the employment agencies that are managing those relationships with contractor and client, we need to be the intermediary, and actually giving firm advice or guidance, really isn't our area at all. That is down to specialists if people do feel that they need some further guidance. So I'd say we've just had a couple more come through. So I'd say we've probably got we might have time for another one. Do you think, gents?
Yeah, I think so. I think just pick up on the one. So the question is, if someone falls within IR35, so remember that IR35 is they're coming via an intermediary, and we pay them via the payroll because that's the mechanism that we need to use. Do we deduct tax, NIC, and pension? You deduct tax. You put them on the payroll to deduct tax and NIC, not because they're an employee, because if IR35 is in case, they're coming via an intermediary. So we're not changing their employment status, but we are operating a withholding, and it's a withholding of tax and NIC, but not pension and not holiday pay. So it is a tricky one. I understand that, but what you've got to understand is that IR35 is there's an individual, but they're coming through an intermediary. So we wouldn't normally look. So we haven't got an employee-employer relationship, but we have got a piece of legislation that says where that applies, where IR35 applies, because there's an individual who would be an employee if it wasn't for the fact there's an intermediary in the middle. We'll put them on the payroll to deduct tax and national insurance to the Treasury, but we're not changing their status to that of an employee, and therefore the pension and the holiday pay things don't apply. That's because there's an intermediary. If there isn't an intermediary, then we are always into employed versus self-employed. We're engaging an individual, and when it's not through an intermediary, we should be thinking about employment status and not IR35.
There just seems to be one more there. I don't know if.
Well, I think I tried to wrap them both up.
Yeah, I think that's covered, isn't it? Yeah, and into both. Okay, lovely. Yeah, I'd like to thank you both. Yeah, Graham and Nigel, thank you very much for sort of doing this again. Let's hope in 12 months' time we don't need to again do the topic, but I actually think we probably will need to do some sort of refresher, because there is clearly this area or limited period of time where there's going to be some leniency by HMRC for status determinations and non-fraudulent activity, which is going to give us all a bit of an opportunity to make sure we're up to speed. So, and again, I'd also like to thank everybody for attending today. Thanks for taking the time out. I do hope you got some value from it and from the content. Please, if there's any questions further to the session today, please send them over to us. I'll drop a line round to everybody now, just so they've got contact details, and I'll also make sure that Graham and Nigel's contact details are shared as well, so straight away. But then also we will follow up with the follow-up from the webinar, which will have the video, the slide deck as well, and any other bits there that we've mentioned that may be useful to people. So again, thank you very much, everybody, for attending today. Have a good rest of the day, and we will hopefully see you on one of these again soon. Thanks very much.
Thanks, everyone.
Stay safe.